Welcome back to Career Success Strategies for Investment Analysts. This is part two of this masterclass on the career success model, presented by JE Fundamentals. My name is Juan Espinoza, Managing Director at JE Fundamentals. Before we continue, please consider the disclaimer on the screen. This educational video should not be taken as personalized guidance, coaching, or mentorship. This is a four-part program. It covers the 4 steps of a powerful career success model for investment analysts. On part 1, we reviewed the important concept of zone of genius. For this installment of this masterclass, we focus on the importance of matching your natural skills or zone of genius to the specific type of job you want to have in this industry. Let's start by quickly recapping what zone of genius is. You will then see how it connects with specific career tracks. Your zone of genius is what you do better than most other people you know. You know you're better because you see it. Other people see it too. People tend to come to you with questions about that specific skill. In short, you very organically and naturally become the go-to person in that skill or ability among your circle of friends and colleagues. Not only you're better than most people, but you can also improve your skill in that area with a relatively low amount of effort. And as you improve, you're able to surpass your peers by a wide margin. This makes you a true genius in this specific skill or ability. Now, it's important to emphasize what was just said. Your zone of genius is not a competitive advantage all by itself. There are 2 key conditions required for your zone of genius to become a real competitive advantage. First, this natural strength must be nurtured, so you can far surpass your peers and become a genius in it. Second, the zone of genius must be highly relevant to how you add value at work. This can't be emphasized enough. Both conditions are required. For example, if you're an accountant, working in a basement among piles of accounting archives and spreadsheets, and you happen to be a genius at graphic design, your graphic design genius ability is unlikely to help anyone or earn you any fame and fortune. Now, let's look at some examples of areas in which you could potentially have a genius level of performance. This list is long, but not necessarily complete. There may be other examples. These various abilities are in themselves not rare. You probably have all of them developed to some degree. However, to get the level of genius performance, you'd have to be much better than most people you know. To be truly helpful to your career goals, you would have to be much better than your peers. Perhaps that for you is numerical aptitude or strategic thinking or social intelligence, etc. There are many ways in which you might be able to add value ahead of your peers. Let's now look at some case studies so we can appreciate how zones of genius vary across different niches in investing. You will be presented here with 4 case studies, each one for a different niche in investing you see on the screen. Fundamental equities, high-yield bonds, distress investing, and private credit. I chose these specific case studies because I have personally worked in these 4 areas during my 25 years of career. For that reason, I'm well qualified to understand what is required to excel in these investment niches. The goal will be to figure out which zones of genius apply to each of these fields within investment management. You will see which are the relevant skill sets to that segment of the market. And finally, you will see which zones of genius underpin the most relevant skills to create outstanding performance in these specific investment niches. For example, quantitative investing requires superior skills in advanced math, computer sciences, and data analysis. But those are learned skills. The underlying zones of genius to those top 3 skills are far above average quantitative aptitude, pattern recognition ability, and abstract reasoning ability. Keep in mind that to establish the top 3 skills and the corresponding underlying zones of genius for each segment, it is strongly recommended to speak with people in the field. ChatGPT and other AI tools might be able to give you a list of skills and abilities required. However, only a professional in the field can confirm it and give you the nuances of what really drives success in that particular niche. This is where networking skills will come handy. Let's jump into fundamental equities. This includes investing in publicly traded equities. It's the domain of many institutional investors, mutual funds, and hedge funds. It's fundamental because investors make these investments typically one stock at a time based on fundamental analysis. Fundamental equities investors perform bottom-up research and due diligence. They build spreadsheets and forecast the earnings of companies. They write memos, make presentations to clients, participate in conferences, and a few other things. These investors want to understand the business models of these companies deeply. In that way, they can anticipate their prospects and performance. Fundamental investors talk to management teams, industry experts, and seek to become experts themselves. What you see on the screen is a list of skills successful fundamental equity investors need to do their job at the highest level. Feel free to review this list in detail. There might be other skills you want to add, but the key ones are there. Next, you want to figure out what the underlying zones of genius are. As I said earlier, you want to talk to people in the field to confirm it. The question to ask these insiders is the following. Which superior abilities does someone require to produce both superior performance and long-term career success in fundamental equities? That question should elicit a good conversation on the subject. Once you talk to a few people in the field, you'll be able to form a precise idea of what produces superior performance in any particular niche. I want to emphasize here that every niche has its own select mix of skills and abilities and zones of genius that drive superior performance. Based on over 25 years of direct personal experience and careful observation, here I show you all the zones of genius that are the most likely to create a real competitive advantage in fundamental equities. All the zones of genius on the screen are important to some degree. However, the top 3 highlighted here are truly the ones the elite fundamental equity investor possess and cultivate to stand out. Now, going into the why these 3 are the top, the first one is obvious. Analytical thinking allows you to discern good from bad opportunities. Intellectual curiosity is the engine that pushes you to learn more and more, digest information, become an expert, etc. Social intelligence is crucial to connect with management teams so you can get more nuanced color on the prospect of a business or industry. Now let's move on to the next case study. Case study number 2 is investing in high-yield bonds. This includes investing in the publicly traded bonds of companies with higher risk or leverage. These bonds have higher yields than regular investment-grade bonds, which is their main appeal. High yield is also the domain of many institutional investors, also mutual funds, hedge funds, and even some special situations funds. Investors in this asset class share various commonalities with fundamental equity investors. They also evaluate these investments one security at a time. They seek to perform bottom-up analysis, due diligence, build spreadsheets with forecasts, etc. However, there are some key differences. For example, high-yield investors are much more focused on cash flow generation. They pay close attention to liquidity, solvency, and the balance sheet health of a business. These investors also want to understand the business models of these companies deeply. They focus way more on how these businesses manage cash levels, the priorities on debt repayment, what collateral guarantees the debt, and other credit-related drivers. Their main goal is to get repaid and would much rather not have to go anywhere near bankruptcy. They also talk to management teams, go to conferences, and become experts in industries and companies. What you see on the screen is a list of skills successful high-yield bond investors need to do their job at the highest level. Feel free to review this list in detail. There may be other skills you want to add, but most of the key ones are there. Next, you want to figure out what the underlying zones of genius are. Again, you want someone to help you answer this question. Which superior abilities does someone require to produce both superior performance and long-term career success in high-yield investing. Based on direct personal experience in high-yield bonds and careful observation, these are the top zones of genius that are likely to create a real competitive advantage in high-yield investing. All the zones of genius on the screen are important to some degree, but the top three highlighted are truly the ones the elite high-yield bond investors possess and cultivate to stand out. I'd like you to notice detail orientation as a zone of genius. High-yield bond investors must read large volumes of legal documentation and look for tiny deviations from the norm that might give companies leeway to minimize the impact of not repaying their debt. High-yield funds can be easily harmed by not properly understanding the real obligations of their debtors, which are the bond issuers. Attention to detail is not just required, it must be a substantial strength. I also want to mention risk perception. Every investment niche requires this ability. However, high-yield investing and credit in general is highly sensitive to interest rate levels, the economy, and other similar risk factors. This requires a strong insight into how many factors affect not just a single investment, but the portfolio positioning, duration, long-term yields, and similar factors. Let's review now case study number 3, investing in distress and special credit situations. This is the field in which I practiced up until December of 2023. This includes investing in publicly traded bonds, private debt, and even equity. Distressed investors go after these securities when they are trading at deep discount to their intrinsic value due to risk of distress, or perhaps because they are already undergoing bankruptcy. This is the domain of alternative investors with highly specialized skills. I worked in this field for almost 15 years and can attest to the high degree of preparation required to succeed. Investors in this type of asset class share various commonalities with fundamental equities and high-yield investors. They also evaluate these investments one security at a time. They perform bottom-up analysis, due diligence, build spreadsheet with forecasts, etc. Like high-yield, there is a focus on cash flow generation. There is a close attention to liquidity, solvency, and the balance sheet health of the business. There is also a major focus on capital structure and legal aspects impacting the business. An investor must understand how a distress situation impacts a host of stakeholders. All these factors can impact returns. Credit risk, collateral, and other credit-related drivers are also extremely important. There is more to be said, but for now, I just want to emphasize how complex this area of investing is and the many skills required. What you see on the screen is a list of the key skills successful distressed investors must have. There may be other skills you want to add, but most of the key ones are there. Next, you want to figure out what the underlying zones of genius are. Again, you want to answer the following question. Which superior abilities does someone require to produce both superior performance and long-term career success in distressed investing? Based on my personal direct experience and careful observation, these top 3 zones of genius are the most likely to create real competitive advantage for distressed investors. Before I go on, I want to explain legal and structural reasoning. This refers to a deep sense of what's really happening from a legal standpoint and from a company funding standpoint. It may sound confusing for those unfamiliar with this field. It mainly refers to the complex web of legal and funding issues that affect a distressed investment now, and the discernment of what it will take to make the investment profitable for the investor. It comes from a cognitive comfort with a mix of various legal and financial variables. The second zone of genius on the table, thriving in conflict, also deserves a special comment. Distressed investors spend a fair amount of time dealing with court proceedings, negotiations of terms and conditions, and various aspects of litigation. It is not advisable to get into this field unless you're extremely comfortable going to war legally speaking and financially speaking. You will be going to war with management teams, with other investors, and various stakeholders. Comfort with conflict has to be second nature to you. If that's not the case, your life will be miserable in distressed investing. Be warned. Also, a quick mention of quantitative skills. In many instances, distressed investors have to produce quick quantitative analysis and evaluations of negotiation tactics that make financial sense on the spot and under pressure. Being good with numbers and financial logic under duress is a basic requirement. During my years in this field, I observed that the most valuable players were typically former investment bankers with experience in restructuring advisory. This was followed by former lawyers with a background in bankruptcy litigation and a strong quantitative sense. Really gifted credit and high-yield investors can also do well, but I tend to put investment bankers with restructuring experience at the top. When it comes to distress investing, not having these competitive advantages is like climbing uphill with a bag full of rocks. You will hear this again and again in this masterclass. Success in investing is all about having a competitive advantage in your chosen field. Let's move on now to our last case study, investing in private credit. This includes investing in existing loans to corporations given by banks and other investors. It also includes loans originated or given by your investment team to corporations rather than acquired from other investors. This field has a lot in common with high-yield bonds because of the depth of credit analysis required. However, there is an additional layer of complexity in that the investor must find suitable deals for his portfolio and must conceptualize the optimal structure and terms for the loan given to the borrower. This field is growing rapidly due to favorable regulatory change. However, it's highly competitive. There are now firms of all sizes in the alternative investing space, including hedge funds and special situation funds, looking for the best lending opportunities. Investors in this type of asset evaluate these investments in detail. They spend many hours in one-on-one negotiations with management teams and do work that includes back and forth loan proposals, in many cases in competition with other lenders. The work also includes bottom-up analysis, due diligence, building spreadsheets, forecasts, etc. Again, much like bond investing, there is a focus on cash flow generation. Close attention is given to liquidity, solvency, and the balance sheet health of the business. Investors have to study carefully the way the company manages their cash balances, the priority of repayment among various creditors, collateral, and other credit-related drivers. Their main goal is to get repaid and do not want to risk dealing with a bankruptcy or any credit event. What you see on the screen is a list of top skills required to be a private credit investor. Your method to better understand the requirements of success here should be the same as before. You want to figure out what the underlying zones of genius are. Again, you want to answer the question: which superior abilities does someone require to produce both superior performance and long-term career success in private credit investing? Based on direct personal experience in private lending and careful observation, I'll show you here the top zones of genius that are the most likely to create a real competitive advantage for private credit professionals. The top 3 are highlighted. Relationship building is crucial in this field. Finding appealing investment opportunities can be daunting. The field has become extremely competitive. Given that value added is largely relationship-based, high relationship IQ is needed. You also must evaluate which companies and people you want to do business with and who to avoid. A few bad calls can completely sour your portfolio and hurt your performance and reputation. Private debt that becomes distressed is not easy to divest at a reasonable price. During my years in this field, it was my observation that the most valuable players were former investment bankers with experience in debt and capital markets. High yield and other investors are also able to transition to this field successfully. However, I would argue that the former bankers I mentioned are the best suited to do this job better than peers. Not only are they able to find clients much easier than their competition, but also they are able to structure the best solutions for the borrowers, which is a substantial competitive advantage. These are crucial value-added activities that take a while to master. Even having these zones of genius, there is a lot of training involved, and having those in these positions is a real competitive advantage. We cover a lot of ground in this video. It should give you a strong foundation to evaluate specific investment niches that interest you, and it should also be helpful to assess your own potential to fit in these niches. Think about this question: what is your zone of genius? And another key question, do you know what are the zones of genius that apply to your chosen field? Take some time to apply the same case study type of analysis to the investment niche in the market that you participate. Think about the zones of genius required and where you stand in relation to those zones of genius. Once you have done this analysis, it would be very helpful for you to determine where you stand in terms of competitive advantage. You may want to think about whether there is a different niche in investing where you may have a real competitive advantage you might be ignoring. Another question is, do you have a plan to nurture and expand any competitive advantages you might already have? Having an alignment between your zone of genius and your career path is the best predictor of your long-term success. We have completed part 2 of the career success model for investment analysts. Having a job that matches your zone of genius. And on part 3, you will learn how to think strategically throughout your career. You will review in depth the 4 pillars of a strong career strategy. You don't want to miss it. Go on and watch part 3 when you're ready. Before we say goodbye for now, this is a reminder to visit any of the links on the screen and claim your completely free guide to performance reviews. It only takes a few seconds to claim it. This guide is a comprehensive review of the annual performance appraisal process. It gives you the tools you need to have an annual review that really boosts your career and sets you up for your next promotion. You can go to any of the 2 websites on the screen to claim the PDF now. See you on part 3. Please consider the disclaimer on the screen. This educational video should not be taken as personalized guidance, coaching, or mentorship.